Good morning, good evening, and good afternoon, everybody. Sorry about that delay there, but we are here now with high probability short-term profits. Hope everybody's having a great week so far. Today, we're going to get in first with a market review. We're going to talk about that Fed announcement that they had yesterday. It was huge. It was crazy. It was average. Status quo. Business as usual. Next up, we're going to talk about that Snipers portfolio, still at that 92% win rate, 13 straight wins. Then we're going to go through some recent trades that we've been looking at. We're going to talk about GE Aerospace. Then we're going to talk about a current trade that we're going to do today. I'll let Mike intro that one on in because I think it's going to be a good one. It's going to be a fun one. Then we're going to go through some of your questions. We're going to answer some of your questions. We're going to go through your stock tickers that you're looking at. Let's get things going. Enough about me yapping over here. Mike, how you doing, sir?
I'm doing good, Brian. How you doing, buddy?
Doing well. Just, getting through all this cold.
Oh, you guys are still cold up there?
Yeah, it's still a little chilly. It's warmer today, but it has been chilly.
Yeah, I mean, last week I was in Houston. I came back to Costa Rica on Monday night, and I went from cold and snow to sunshine and humidity and monkeys. It's like, where am I?
Always a fun transition there.
Yeah, you said something about the Fed announcement and almost said wah, wah, wah at the end.
I needed my trombone, the womp, womp, womp.
Yeah, I used to play the trombone in high school, man.
Yeah, did you? Nice.
I did.
That's awesome.
Not a very sexy instrument. You can't just like sit there and serenade anybody with a trombone.
Yeah, it's tough too. It's kind of like using a tuba, you know?
Yeah, right. Hey, let's pop up that little image of Fed Chair Powell yesterday. And I was pretty sure that they were going to leave the interest rates flat, like not change them. Everybody and their mama wants the Fed to cut rates, but the Fed, and I'd say the only notable change was a posture change, and they're even more concerned about inflation raising its ugly head once again. Why is that? Well, Trump is talking about tariffs on China, Mexico, Canada, even Colombia, and big tariffs like 25%. And it hasn't happened yet, but it's looking like we're going that way. And the impact of 25% tariffs is that goods coming in from foreign countries will get more expensive, lifting prices and increasing inflation. So that's what they're on guard for. The markets in response yesterday, here's yesterday, right there where my pointer is, it came down. And then during the announcement, I was watching a minute bar and the S&P 500 came down a bit. And then Powell spoke, and then there was a bit of a recovery. So at the end of the day, pretty much a non-event. We were down a slight bit. Now, one thing I am evangelical about is support and resistance. And so I want to talk a little bit about how we can sort of predict where the markets may go next, and the emphasis on the may because we don't really know. But this is support and resistance. So 610, and by the way, I'm looking at the SPYs. This is the ETF that tracks the S&P 500. And what you can see here is that around number 610, not 611, not 609, but 610 was resistance for 2 days in a row. That was all-time high territory. And then all of a sudden, a Chinese AI company called DeepSeek came out and said, hey, we got a new AI model. It's cheaper. It's open source. It takes less power. And that tanked the markets. It tanked NVIDIA. It tanked Avgo. In fact, I'm sort of compelled. Let's take a look at NVIDIA. And the reason NVIDIA is so important in the S&P 500 and the NASDAQ is that it's the biggest weighted. It constitutes 7-8%, depending on which market you're talking about, of the market. So when a big weighted company on the S&P 500 tanks, there's NVIDIA on the day that DeepSeek came out, it tanked below the 200-day average, recovered the following day, and then yesterday, a bounce off the 200-day average. So it looks like NVIDIA may recover, but let's be clear, the reason that the S&P 500 came down was primarily because NVIDIA came down. All right. Now, lately, the last few days, there's some doubt around whether or not the announcement was 100% truthful. Was it all true what they said? They said that it didn't take them much money to develop the technology, whereas all of the other AI chip companies spent a great deal, billions of dollars to develop this technology, and they said just a handful of $1 million. So is it true? I don't know. And nobody does for sure right now, but we do have a bit of a bounce. We can go right to cnbc.com and you can kind of see what the futures are looking like. All right, so the Dow futures are down a slight bit. Remember, futures trade 24/7, well, not 7, 24 hours a day, starting Sunday night all the way to Friday night. And it gives us a chance to see what the markets will do at the open. So the S&P 500 is up a third of a percentage point, NASDAQ a bit more. So we will get some level of a bounce this morning. And now let's go back to the chart and derive some logical way to determine where the markets might go next. All right. Now, I would say be cautious about adopting a bullish posture on anything, really, until we see the SPYs crack up above 610. Because what could happen is the same thing that happened here. We get our bounce. We're going to have a little bit of a higher day today. We hit our 610 and we stop and we do another one of these. All right, so that is a possibility. The safest bullish directional prognosis would be indicated by a close above 610. Maybe write that down. SPYs closing greater than 610, more likely that will have further upside. Now, on the other side of the coin, I also want to point out how 600, another round number, a multiple of 100, 6 times 100 is 600. Those levels, look left, tend to be resistance and support levels. Resistance, support, resistance, support, support. Hammer pattern here yesterday. When you see a hammer pattern, looks like Thor's hammer a little bit. When you see that, and it happens, the tail tests support, almost always you're going to see a bounce. All right, so I think we're going to hit 610 probably the next week or so, maybe even by tomorrow, Friday. But I don't have to guess on a bullish prognosis. I could say, all right, I'm going to be cautious. And then once we get a close above 610, then bullish prognosis on the markets. Ryan, we're like a whisper away from all-time high territory. And, you know, the markets have been bullish for quite a while, intermixed with a great deal of volatility. Look at these, the gap down that gets us the election, the gap up, the crash down, the run up to all-time highs, crash, bounce, crash. It's very volatile right now, and directional trading is tenuous at best. So let's be careful on taking bullish opportunities. Now, one of the things about sniping that is really powerful is that we aren't immune. We certainly are not immune to this kind of volatility. The overall 500 biggest companies are gapping around, then that's likely to take whatever stock you pick and move that stock. Now, because, and here's a good example on GE, we placed this trade last week. We're currently up 8.5% on it. But let me just take you through this little picture here. This is a risk graph on the right and the stock chart on the left. So the risk graph shows us profit to the right of this line. So this is how much profit we can make. And this is how, to the left of the line, this is how much we could possibly lose. Okay, so that's a risk graph, and you know there's a lot more to it than that. If you like risk, if you're interested in this software, you can go to tomsoptiontools.com and check it out. It's a really cool piece of software. It helps me visualize what's going on. So let's go back to the GE chart. So GE gapped up on earnings. This was exactly 1 week ago. GE ran up all the way up to, let's say, 207 or so. And then it came down, and then it came down, and then it came down. The rest of the markets came down too, and it took GE with it. But because our line in the sand was at 190, which is roughly this line here, we're safe still. As long as the stock remains above 190, this will be a winning trade by expiration, which is February the 7th. All right? So that's sniping. Ryan, what's our win rate again? You mentioned it.
2%. 92%. Got it up on the screen for you.
Yeah. You don't remember our gang probably with Spanky and Alfalfa. Remember those?
Of course I do.
You remember?
Of course. The Little Rascals?
Yeah.
Of course.
And they overacted, right? So when they were surprised, they would do this. And that's what I'm doing when I look at our 92% success rate. It is consistent. Over years, I've been doing this. We've been doing this show for over a year now, Ryan. And since we started, 92% of our trades are winners. And if we could pop that graphic up real quick, you already have it up. We've had 59 trades in over a year now. 92% of them winners, which means 54 out of 59 wins. Only 5 losses? What? It's amazing. It's amazing. And on average, we're generating 11% every 5 days. So you're like, 11%. Who cares about 11%? Well, I do. I do if I can do it every week. If I could take 374 or 50 or 5,000, whatever your position size is, and make my 11% in the first week, do it again, do it again, do it again, get on base, get on base, get on base. And every time you score a run, that's 11%. Typically, it's 10% every 7 days. So I'm very happy about it. And you know, this is why we do this. This is why I do this. I created the sniper system. I built a guidebook, which we can kind of give you a graphic of now. But the guidebook takes you through a 5-step process with graphics, you know, finding opportunities, deriving your lines in the sand, that's support resistance. What's a credit spread? How do you construct a credit spread? And most importantly, how do you manage the credit spreads? It's all there, and it's a free guide. Down below here, you can see a link. Just give us your email address, and we'll shoot it over to you. And you can join Ryan and I every Thursday at 9:15. All right, Ryan, I think we have an opportunity on a company that everybody and their mama has heard of.
It's funny because somebody already mentioned it in the chat.
Oh, yeah?
Mm-hmm.
Great
James.
minds think alike. And that stock is IBM. There we go. I mean, I went to finance.yahoo.com, and there was a lot of these, right? So IBM blew it out. They beat on their expectations. They lifted their future guidance, and the stock has gapped up. So let's go to a chart of IBM. I've got my little watch list. This software I'm using here is called Hub, and it's a really beautiful piece of software. So if you're interested in checking this out, please go to hub.com, HUBB.com, and you can check it out. All right. Now, what's really, really interesting about this chart is the gap. And even more interesting is that gap is at an all-time high. All right, now I got to move fast. I want to derive my line in the sand, and I want to move pretty fast here because the longer I wait, the less expensive the options will be. We call that implied volatility. And that will start cooling off, and we'll get less credit. All right, so the question now becomes, how close do we get? And one thing I've got my eye on here, and if you're in my community, you know about this, but 250 is a round number. And IBM is dancing with 250. It looks like it wants to go higher than 250. And the problem, that's not a problem if it goes higher. The problem that we could have is if 250 resistance held, and see we're at 249.86. So this is institutional money keeping the stock at precisely 250 as I speak. So that's a resistance level, and the risk we have is that IBM may come back down. That's a big move in IBM. That's like a 9.3% move up from yesterday, and it just doesn't seem to want to get above 250 just yet. And if it doesn't, it could drop. All right, so now we have to, and that's fine. It's better to wait a little bit, or you come in and you say, I'm going to drive a line in the sand, maybe at 230, look left, support, 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 resistance, support, 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 resistance. That's a very important level. Certainly 220 would be a good level. Maybe in between 225. I mean, check this out. I didn't even look to the left, and I'm going to set this line exactly at 225. And notice when you look left, here it was resistance and then became support, and support, resistance there, resistance, resistance, resistance at 225. It's magic. It's awesome. Please use that. I call them lines in the sand to make it more colloquial, but they work. They work. It is a very, very good predictive tool. And what I predict is that even if 250 holds up here, let me put another line up there. And so look, it's already starting to come down a bit. So let's be patient. Let's let the trade come to us. Let's be conservative. I'm going to look at, I tell you, here's what I'm going to do, Ryan. I'm going to look at 220 because already you can see IBM is starting to fade. All right. I don't want to put my line in the sand at 230 and IBM comes back down to 230. So I want to be as conservative as possible. So I'm just going to look. I'm just going to go right to a simulated environment. I happen to use Thinkorswim's simulated environment. And I'm going to put up I'm going to go right into the trade section here. And let's take a look at the available expirations for IBM. IBM is the symbol, of course. Let's see. Now, what's cool about IBM's option chain is that we have options that expire every week. So one of the rules out of the guidebook is, generally we go after 2-week options. That's where the short-term part of the short-term high probability comes in. So let's go after Feb 14. Ryan, that's Valentine's Day, man. And let's see. So here's my option chain set up as credit spreads. And if I go to 220, I can see that I don't have enough credit. There's no credit there, in fact. So I'll have to go higher. 250, I'm not seeing any credit. 230, I'm not seeing any credit. So we're going to have to probably just place an order and then allow the trade to come to us. 227.50, 225 is showing. Here's what I want to do. All right, there's not enough time value for me to, I want to do 225, but there's not enough time value to give me my credit. I need at least 10% of the spread width. 225 is the short put. 222.50 is the long. Do the math. That's $2.50 wide. I need at least 10% of that over here as a credit. Not even showing a credit. It shows a debit. So I need more time value. I'll, in this case, go out to Feb 21, and there I see the amount of credit I need. All right, so we're close to it. I'm going to give you the order here in a minute. I'll do 2 contracts, and I'm going to ask for 25 cents, and I'm going to set the order type as GTC. Now listen, if you use GTCs and you're not filled today, you must cancel it. Don't let it just sit out there because IBM could tank. You never know. So use that to help you get a fill. Doesn't always help, but sometimes it does. And let me go back over here to IBM and let's just take a look at the order. So I'm asking 25, current price 23.5 cents. So we have a good shot of getting that. And if IBM does in fact start drifting down, and let's go take a look. Yeah, it's hanging at 250. All right, so that's 225 right there. I would say go no higher than 230. Look left. Again, I just got it. I just heard it. All right, so there we go. So we just got filled here at 225. Let me just show you that it did, in fact, fill. All right, that's a very generous fill on that. This is a simulated environment, and sometimes the live fills aren't as good as simulated fills. So we're going to track it. I'll probably just track it at 25 cents. So Ryan, there we go. Let me give you this, though. Let me give you the very clean order on a spreadsheet. And we just sold the 225s, and we bought the 222.50s underneath. All right, now the minimum credit on this, you should take no less than 25 cents. Get more if you can. So we want to sell to open the IBM Feb 14 225 put, buy the underlying 222.50 put, same stock, same expiration, same option type. Of course, get at least 25 cents. Okay, now what do you do once you're in? It's critical that you manage your risk first. Great traders manage risk and let the profits happen as a consequence of risk management. So our risk management, our stop loss, is if the stock closes less than 225, let me show you. That's this line here. This trade will make money as long as this IBM stays above 225. What does that mean? Well, if IBM runs up to 500, it runs up, we make money. It goes sideways, it makes money. If it drops all the way to 225 and no lower, we make money. Up, sideways, and down. Mega strong probability of profit. And what adds to it is IBM's beating of expectations and lifting of future guidance. Okay, so that's one part, the most important part of trade management. And the other part is once you get filled, simply control your profits by buying the spread back to close for 10% of what you sold it for. So in that case, that would be 3 cents, or round up to 3 cents. Buy it back for 3 cents. You sold it for 25. So how much do you net? 22 cents a contract, which is 22 bucks. And we'll do that as a GTC order, good till canceled. So what does all that mean? It means all you got to do is keep an eye on the stock and do nothing unless the stock breaches 225. The profits are taken off automatically. Sniping. Ryan, I got a little excited there. I love this game. It's one of my favorite ways to trade.
Ryan, that was a lot of fun.
Yeah, man. Any other stocks we can look at?
Yeah, a couple of them. WDC from Tony.
Western Digital. Oh, I know Tony. Hey, Tone. San Diego, Tony. Let's take a look. Okay, it popped up. All right, now I want to see if there was any news. And what I'm going to do now is go to finance.yahoo.com and type in WDC. The pattern to me is not super exciting. And then I want to see some news. Let's see what they said here. Q2 earnings and revenue beat estimates. Expects third quarter revenue below estimates on weak demand. All right, now this is a heck no, because we had mixed news. And they beat on their expectations. They had good earnings for their last quarter, and they're saying that our revenue in the next quarter coming up will be weaker than expected. All right, so it's mixed news, positive, negative news. If you take a look at the stock, it's choppy. No, and I would say no on this one, Tone. And there's so many. By the way, it's earnings season. There's a boatload of opportunities today, and this is not the best of the ones that I know about. this morning. So I would pass on this one, Tone, and find another. Any others, Ryan?
Yeah, a couple more. CLS.
COS. Let's take a look.
CLS.
Yeah, CLS. Thank you.
Mhm.
CLS, Celestica. It gapped up. Let's check the news. Now, see, that's interesting, right? That's interesting because the stock was here yesterday and now it's gapped up. And it's wrestling with 115. And we've got nice support down here at 100. So this could be a good one, subject to whether or not the news is compelling enough. So let's just type in the symbol CLS, Celestica, and let's check the news. Looks like it was earnings. Celestica posts strong revenue growth in 2024, secures major hyperscale win, great momentum stock. Oh, here we go. This is the perfect bullish bifecta. They're up after they beat. They're up 15% as it posts improved Q4 earnings and raised 2025 guidance. Simply said, the best kind of news is beat and raise, which is what Celestica just did. And even better is they miss and they lower future guidance. Okay, so I like it. Less likelihood that the stock will come down. And on this one, I would say go no higher than 100. So that would be a good line in the sand. If you can get a 10% down here at 90, that's pretty much a no-brainer. You could start at 90, look at 95, look left at 95, resistance support. So, but don't go any higher than 100 on this one. But I like that one.
Nice.
Okay, right.
Cool. Last one, WHR.
Whirlpool. Washing machines. Let's check it out. Whirlpool. WHR is the symbol. Oh, baby. That's kind of I feel like a vampire sometimes, Ryan, because the best setups are really bad news. And I'm looking here. I can see the stock is finding support exactly at 110. See that? Look left, 110. And it's bounced off 110. It could rise a little bit. But now let's check the news, WHR, and see what happened. They did announce earnings. Obviously, they were a disappointment. Let's see. Misses Q4 sales targets. I like to see future guidance. Okay, Whirlpool stock is falling. Earnings were mixed and guidance disappointed. Okay, now that earnings are mixed, probably, and I'd have to dig in more here, and you may want to do that. But here we go. Their Q4 earnings surpassed estimates, and then they lowered their future guidance. And so it's mixed. We want them to line up. And so when I see that they beat and then they lowered, still not necessarily a bad trade, but what that implies is because earnings were good for last quarter, we could get a little bit of a bounce. So this is, again, it's a mixed one. So I'd be a little bit careful. I would say if you like this one, go no lower than 125. You could make a case for 120 right there because you have some other support resistance levels, namely 115 and the 50-day average, this red line here, and then 120. 125, though, to me would be the safest bet on this one. All right. Any others? There's plenty right now today.
Sweet. No, I'm not seeing any others.
All right. Well, let me give you a few others here. UPS. Anybody see this one? UPS. Yum. UPS looks really good. Let me show you the news here. And they announced their earnings. Obviously, they weren't very good. And the stock tanks. Q4 results in line with expectations, but stock drops. Weaker than expected Q4 results. All right, this is, they beat on earnings and yet the stock has come down. So that's a mixed one. I'll give you a few others to consider. I'm not going to go do all the analysis, but Cigna Group came out with earnings, CI, and they tanked. We've got Mobileye. Mobileye was looking interesting, but it's recovered, so forget that one. Forget I said it. ServiceNow looks good as well. They came out with bad earnings. NOW is the symbol. Right. I think that's it for today. IBM is looking good. Let's wrap up by seeing how IBM is behaving. Okay, nice. Now IBM has broken free, blue sky, already trading at 255.60. And if you happen to get a fill, you're already making money on IBM. All right, everybody, get the guidebook. Join Ryan and I, please, every Thursday at 9:15. We do this every week. It's earnings season. The fish are jumping in the boat. So get the guide, read it, and be ready for next Thursday at 9:15 for high probability short-term profits on the Hub channel. Have a good weekend, everybody. See you soon.